Okay, everyone, we're going to get ready to get started on today's next session as part of the University of Texas Energy Symposium. Welcome, everyone. Thanks for joining us at UT Energy Week. I'm Carey King. I'm a research scientist and assistant director at the Energy Institute here at University of Texas at Austin. And today, it is a pleasure to introduce our speaker for today's UT Energy Symposium, which is a weekly speaker series that the Energy Institute sponsors. Weekly talks on energy across the board, from engineering to materials science to policy, law, economics. The goal is to educate our students and the public about a broad range of issues around the area of entropy. Sorry, not entropy. Well, maybe entropy too, but around energy. And so today, it is a pleasure to have UT alum Sanjay Bishnoi, who is the CEO of Entropy Inc. So a little bit of background on Sanjay. He's the CEO of Entropy Incorporated, a private equity-backed operator of low-carbon power and carbon capture systems. He's responsible for leading the talented team at Entropy as they originate, design, build, own, and operate energy systems to produce low-carbon power and decarbonize existing industrial infrastructure. Bishnoi has over a decade of experience as a C-suite executive, mainly as chief financial officer and co-founder of Caprock Midstream, CFO of Interflex and Parex Resources. His 30-year career has focused on energy, the value chain from energy, from exploration and production to infrastructure and services, and he has held various engineering, operating, and financial roles. He holds a PhD in chemical engineering from here at UT Austin, also an MBA from University of Chicago, and a bachelor's from University of Calgary. So engineers can also learn finance and other business acumen. So this is great. A little short abstract on the talk today. He's going to explore the journey of Entropy Inc. As an entrepreneurial and private-backed equity company that is working to commercialize low-carbon baseload power from natural gas-fired generation and carbon capture technology. Entropy Inc. CEO Sanjay will discuss the carbon intensity, the economics of power generation with carbon capture and sequestration, and the challenges of commercializing and scaling up power generation with carbon capture and storage. So with that said, let's welcome our speaker today, Sanjay Bishnoi.
Thank you. Thanks. Hopefully you guys can hear me okay. It sounds like it. Great. Well, good afternoon, everyone. Pleasant day. If you're from Calgary, it's nice to be in some warmer weather. I guess, sun's not totally out, but it's always a pleasure to be back on campus at UT. And as Carey mentioned, my name's Sanjay Bishnoi, CEO of Entropy Inc. I'm going to be talking today about producing low-carbon power from natural gas and carbon capture. And before I do that, I just wanted to say a quick thanks to the University of Texas, to Carey, to Brian, to the Energy Institute. The agenda here is really nice. I think it's a great event. So thanks for pulling it together, and thank you for inviting me to talk today. So here's what we're going to chat a little bit about today. There's a lot of interesting things going on in the U.S. power market. I think that's a good place to start. We'll talk a little bit about data centers and the increase in power demand to serve those. I'd like to tell you a little bit about our views at Entropy about the role for natural gas-fired generation combined with carbon capture. And I'll tell you a little bit about the history of Entropy, how we got started, where we are today in our journey, and what's ahead of us. We'll talk a little bit about how we scale what we've already accomplished at Entropy. We have a couple of operating plants that are, some of them are first of the kind in their world in capturing post-combustion carbon at commercial scale. And then the staff at the Energy Institute asked me to talk a little bit about entrepreneurship. And this is my second C-suite gig as a private equity-backed, high-growth startup, founder of a couple companies. So I wanted to just give you a perspective of how I think private equity can really contribute to the growth in the energy industry. And then we'll just conclude by talking about carbon capture, the outlook, and some of the challenges, the main one being that someone needs to pay for it. So let's start with the U.S. electric grid. What we're showing here on the right-hand side of this chart is the total production of electricity in the United States by different source. You can see that we've got about 25 years of history that we're showing on the chart, plus about 5 years of projection. And a couple of things that I'll point out about this data series. Early in the 2000s, we had a fair amount of growth in the power sector, and that was really driven by combined cycle natural gas. There was a lot of combined cycle assets being built during that time frame. Everything else was relatively consistent on that page. Then you sort of move into the decade of 2005 to 2015, where there was less growth in the market, a little bit of coal coming off, some modest growth in gas, but you started to see the emergence of the wind and solar energy contribution to the generation mix. And then if you look sort of 2015 to today, really it's pronounced by the retirement of coal and the emergence of renewables in a pretty big fashion. And then if you look at the forecast period going forward, that growth in renewable really expands quite a bit. And so if you just take a snapshot of the power grid in 2000, and you took a snapshot of the power grid as it's expected to be in 2030, what you would see is really two things, in my opinion. The first thing being that the size of the market has roughly doubled in the US. So some pretty substantial growth in 30 years. The second thing is that we're going from a grid that was largely powered by what I would call baseload power sources. Things that when you flip the on switch, you're pretty confident about what you're getting from an output perspective. That is going to change quite a bit. It's already changed. And by 2030, we expect somewhere around 45% of power generated to come from what I would call intermittent sources. And those are sources that when they're on, you're not exactly sure the output that you're getting. It depends on how bright of a day it is, how strong the wind is blowing, et cetera. And so I'm going to introduce a new, maybe not such a new concept, but something that we call the energy quadrilemma. And one of the variables in the quadrilemma, in my opinion, is really how reliable is the grid. And I think we're seeing less reliability in the grid and expected to see less reliability going forward. So we need something to firm that unreliability. So what's driving a lot of the growth? There's a couple of factors. This is really the biggest factor, which I'm sure many of you have read about. The growth in computational power in data centers is probably contributing to a third to a half of the growth over the next 5 years that's projected. It's not just AI. It's also just more computational power, all of the wonderful apps that we use in our work, the things that are supposed to increase our productivity, the things that likely decrease my kids' productivity. All of those things require a lot of computational power and therefore a lot of energy. So we're moving from a world where only a couple of years ago, 2018-ish timeframe, data centers were about 2% of the US energy demand. And if we fast forward a couple of years to 2028, the projection ranges are somewhere between 7 and 12% of total US electricity demand. So that is a massive change and probably the biggest driver of the projections going forward. So, the good news to me is that the hyperscalers, the tech companies, the folks that are really driving the adoption of all these new apps and the new computational power, they are quite cognizant of the environmental footprint that these applications have. And so they've made some fairly strong commitments to decarbonize power. I certainly think that it falls a little bit lower in their objective function, like certainly growing their businesses is objective number one. But they do have objectives to lower their carbon footprint. And when we talk to these customers as potential customers of our products, one of the first questions that we get asked is about carbon intensity of the power that we're proposing to supply as a solution. So what we're showing on the right-hand side here is just some carbon intensity of different sources of power. you can certainly see that as we move from a world that was dominated from coal-fired generation, which was over a ton per megawatt hour, a ton of carbon per megawatt hour, and we started displacing that growth with CCGT natural gas combined cycle. We more than halved the carbon intensity, so very strong attribute of natural gas. And I think another thing that I would point out here is that when you have intermittent sources of power generation like solar, you have to back up that intermittency with something that is going to be there when you hit the on switch. And more often than not, that power is from a simple cycle natural gas asset. The carbon intensity of that simple cycle asset is higher than a combined cycle asset, and therefore if you look at just a solar asset and how that needs to be backed up by simple cycle natural gas peaking, what you find is that the carbon intensity is roughly in the same ballpark as a combined cycle natural gas plant. And so, the fundamental question is, can we make natural gas better? And that's where carbon capture comes in, and we think the answer is a resounding yes. We think that you can actually get the carbon intensity of natural gas down below 100 kilograms per megawatt hour. The low carbon power that we're producing at our plant in Glacier, we've done a lot of modeling on that, and we actually are somewhere around the 60 kilograms per megawatt hour range, which is quite impressive for a natural gas asset. So I talked about the energy quadrilemma, which I know everybody's talked about the trilemma before, but I'm introducing a fourth axis to that. Cost is always important. Reliability is, we've already talked about that, is very important, especially to data centers. They talk about 5 nines, so they talk about the reliability being 99.999% of the time. Certainly carbon intensity is a big question that we get when we start talking about providing low carbon power. And then the final one is speed to market. And the hyperscalers are very much in what I would call a land grab right now. It's about producing the most computational power to house their algorithms and to get there first. And so really speed to market is a question that we are getting more and more. And I think as the supply chain tightens, it's getting harder and harder to hit the timelines of some of these very demanding customers. So let's have a look at the different components and the different ways that you can produce power. So renewables, lots of great things going for renewables. They're actually quite affordable, especially when you layer on production tax credits for wind or investment tax credits for solar. Quite low cost power generation source. Their carbon intensity is quite low, and you can actually build these things relatively quickly. As we've talked about, the challenge with renewables is the intermittency and the reliability of renewables. If we then turn our attention to natural gas, again, quite good on the cost front, very good on the reliability front. Speed to market, I would have said very good, although if you talk to our friends, I know we've got a panel tomorrow with GE Vernova. They're feeling pretty good about their order book these days. And certainly the constraints in the supply chain now are making that time to market a little bit slower, but certainly stuff that you can get done in a 3 to 4 year time frame. So pretty good on speed to market for natural gas. The fundamental question is, can we do better on carbon with natural gas? We think the answer to that is a resounding yes. So when you think about natural gas with carbon capture and sequestration, you still have the same reliability, very strong. You're able to lower the carbon intensity to be quite competitive with renewable sources when you include the fact that they need to be backed up with what is probably natural gas peaking. From a cost perspective, you are going to add a little bit of cost to the equation. Every situation is specific, so it's really hard to generalize, but if you make a bunch of assumptions, I generally think about a new CCGT plant is, call it $3 gas, you can get it economic around $75-ish per megawatt hour. We tend to think about carbon capture when you net out the costs of the 45Q is adding about $20 a megawatt hour to that cost. So it's certainly adding cost, but it's still a marginal cost that you're adding to the solution, and the speed to market really doesn't change. Our carbon capture technology can be rolled out in the same time frame as the actual, CCGT plant itself. So a pretty strong offering, natural gas plus carbon capture. And then, no discussion on the energy mix going forward would be complete without talking about nuclear. I know there was an entire day dedicated to nuclear yesterday at this symposium. And, certainly a very strong technology. I think I'm a big proponent of nuclear going forward. Very reliable, very low carbon intensity. The challenges are really on the cost and the speed to market side. So, I think the latest nuclear plant built in the U.S. was in Georgia, the Vogtle plant, which I think cost-wise was well over $100 per megawatt hour. And speed to market, I think it was under development/construction for about 20 years. So there's a huge time challenge. I have no doubt that our colleagues in the nuclear industry will improve both of those variables. And so the way that I would sort of conclude our discussion around the mix of power sources going forward is really with this summary chart. So we've got the 4 variables of the quadrilemma along the x-axis there. And I hope that there's a couple of things that you would take away from this description. The first thing being that there's no panacea. There's no single one silver bullet that's going to solve all of our problems in the energy space. We really need an all of the above option. I think the forecasts for the generation mix going forward demonstrates that, where we've got a healthy mix of renewables, got a healthy mix of natural gas, a healthy mix of nuclear, and we also believe there's a very strong role for natural gas with carbon capture to play as well. The other thing that I would hope that you take away from this is that the challenges with carbon capture are sort of in the yellow zone. There's nothing that's really a flashing red light or a solid red light. We think these are all very accomplishable challenges for us to get over. So let me introduce you a little bit to our company, Entropy. So we actually came out of a Western Canadian oil and gas company called Advantage Energy. And you probably don't know this sitting here in Texas, but we actually have a carbon tax in Canada. And that carbon tax is very much up for debate right now. We're having an election in Canada. In fact, the slogan of one of the parties is "Axe the tax," right? So there's a lot of discussion around whether it will survive or not. But the executives of Advantage were looking at their carbon footprint. They were looking at the carbon tax, and they saw an opportunity to play defense and also play offense. The defense was protect their assets against the tax, and the offense was if they were to figure it out, they would have a widget to sell to all their friends. And so out of that thinking, Entropy was created. The executives at Advantage sponsored the first project for Entropy. They own and operate the largest producer-owned natural gas plant in Western Canada. It's a plant called Glacier. And it processes about half a BCF of gas a day. And they decided to decarbonize that plant. So they applied for a couple of government grants. They got that money. They approached the University of Regina. There was a technology there that had come out of some of the work around Boundary Dam and some of the professors that were involved in that work. They acquired that technology. They then hired me as their CEO a little while later. I did my PhD here at the University of Texas under Dr. Rochelle, who's there. So decided that we also needed a relationship with the University of Texas. So we now fund research here at the Department of Chemical Engineering. We're part of a consortium, the Texas Carbon Management Consortium. So we are a technology differentiated offering. We have our own unique proprietary technology. We have real commercial experience. So we've built a pilot plant, which has now been operating for about 2.5 years. We then built what we call Glacier Phase 1, which I'll describe in a little more detail in a couple slides. That plant has been operating for approximately 1.5 years, 2 years. And now we're under construction. We're building the world's first natural gas-fired gas turbine, complete with carbon capture on the back end at commercial scale, and also complete with a local CO2 sequestration solution. So it's a full end-to-end solution where we generate power, we capture the carbon, and we sequester that carbon for storage. We're selling power. We're selling low carbon power. As I alluded to before, that power is 60 kilograms per megawatt hour of power production, which is quite low. And we sell that power for $85 Canadian per megawatt hour. That's a very low price, I mean, especially given where the Canadian dollar is right now. I'm not terribly happy about that because I get paid in Canadian dollars, but it's a very attractive power price, and there are definitely some incentives in the Canadian market that allow us to sell that power at that level. You know, that's not something that I think we could replicate around the world, but we have, the point being, very real commercial experience in doing this right now, and we've been working a lot on how we scale this up. So we've got a lot of projects that are on the go now. I'll give you a little bit of a flavor in terms of some of those projects later in the presentation. And the key behind all those is how do we scale that up? Right now it's a 15 megawatt turbine, relatively small, and we're talking about things that are in the hundreds of megawatts, and how do we get to that scale? We're very well capitalized. We have $500 million of equity that we've raised from Brookfield Global Transition Fund, and then also one of the Canadian pension funds, the Canada Growth Fund, has also given us an equity infusion. Maybe more important than the equity infusion, what they've given us is a fixed price carbon offtake deal up to 1 million tons per annum for projects in Canada. So unfortunately, I can't port that to Texas or to PJM or other power markets. But within Canada, we have 1 million tons per annum that we can basically sell, and that's a bilateral contract. Regardless of if we axe the tax in the election or not, that is a bilateral contract that would survive that election. So we're fully integrated. I think it's a very unique business model. We have some competitors that are in the business of providing technology for carbon capture. We have some competitors that are in the business of sequestering carbon, but we will work with an emitter to design, build, own, operate, and sequester, putting our capital to work and our technology to work, a one-stop turnkey solution for an emitter. And then finally, one thing that we realized along the way is that the accounting side of this is pretty important, and really understanding, how much carbon you are capturing, and what energy it's taking to do that. That is actually a fairly complex question to ask, and so we actually have a in-house proprietary software package called Entropy Inc. That's part of our solution that will actually set that up for an emitter. We'll program it. We'll train operators on it, and it can help you do your carbon accounting. So that's the company in a nutshell. Rough timeline. I've talked about a little bit of this already. Company was founded in 2021. 2022, Brookfield Renewable put in $300 million. We had our first integrated CCS application in 2023, raised another $200 million from Canada Growth Fund. We got that offtake deal in 2023 as well, which is the 15-year, 1 million tons per annum of offtake for carbon. And in 2024, we were able to take final investment decision on the turbine project, which is what we call Glacier Phase 2. So it's a turbine plus it's 9 compressors. We're taking the exhaust gas from those 9 compressors, and we're capturing all of the carbon from there. 2025 has been a productive year for us so far. We're continuing to advance some projects, and I'll talk a little bit more about these in a few minutes. We've got about what we call the 4 big projects that we have essentially in FEED stage now. 3 of those are in Western Canada. 1 of those is in California. And then, in 2026, Q2, our Glacier Phase 2 project will come online. So that will be the turbine that will be generating low carbon intensity power and sequestering the carbon on location as well. So I've alluded to this one as well before, but our business is really a turnkey kind of full-stop shop for the emitter. So we will work with an emitter to design a carbon capture system for them using our technology. We will build it, own it, operate it, maintain it, and we will also work on the sequestration solution as well. So I have a team of geophysicists and geologists that work for us. They're very good at sort of scouring an area and saying, okay, this is where you can sequester carbon, this is where you cannot. It's really a sort of full turnkey solution that we're providing, including bringing our own capital to the equation. So I'll tell you a little bit about Glacier Phase 1, 1A, 1B, and then I'll tell you a little bit about Phase 2 as well. So this is the Glacier plant on the right-hand side. As you can see, I think it's like early summer. There's only a little bit of snow on the ground. It's located in just outside of a town called Grand Prairie, for those of you that may have been up to that part of the world. So if you're in Calgary, I think most people know where Calgary is. You go 3 hours north of Calgary driving and you're in Edmonton. Hockey fans will know Edmonton. And then if you drive another 3 or 4 hours northwest of Edmonton, you're in Grand Prairie. So you're pretty far up north. It gets pretty cold up in that direction. So the gas plant is a relatively simple gas plant. It does, refrigeration, liquid knockout, dehy compression of the gas, and there's a lot of compressors there. That's probably the biggest Scope 1 emitter of that plant, is burning the gas to actually compress not only the natural gas but also to compress the refrigerant. So Phase 1 is really taking a couple of those compressors. We've installed absorbers on the end of those compressors. So we're taking a gas that is about 5% CO2 in the exhaust gas, and we're capturing that CO2 using our solvent technology. Those 2 towers, I don't know if I have a pointer here, maybe. It's okay. You can see the 2 very large towers. Those are the actual carbon capture towers on the right-hand side. So it sort of puts things in perspective relative to a pretty typical Western Canadian gas plant. The size of those absorber towers are quite impressive. So that's the capture tower, and that's basically Phase 1's been operating for a while. We're quite happy with the results that we've been achieving. We've been removing 90% of the CO2 that's in the exhaust gas, and we've been sequestering that gas, and we've been monitoring the plume underground, and quite happy with how things are progressing. Phase 2 will be, as I mentioned before, the first commercial post-combustion CCS on a gas turbine. So we're using a Solar T130 turbine. We're actually using the waste heat from that turbine to regenerate the amine, and we have quite a bit more capture than the emissions of just the turbine, because we have all the compression exhaust that's also being captured. So we require more heat than if it was just the individual turbine. It's been FID'd. We've got all of the equipment ordered. We're doing site preparation work as we speak, as we enter spring breakup in Western Canada. And fortunately, we have not experienced any tariffs for equipment moving across the border. So that's something that's keeping us awake. On a day-to-day basis, we've got to track what's being said on both sides of the border. But fortunately, we have not had any exposure to tariffs so far. So the plant will be online Q2 of 2026, and we will be selling power back to the gas plant. They're in a part of the world where the grid is not terribly reliable. So we're going to be selling the majority of the 15 megawatts back to the power plant. We also will sell some power merchant on the Alberta grid, and we use most of the heat for a generation of our amine for both phase 1 and phase 2. We're also giving some heat back to the natural gas plant as well. So it's a full integrated operation, even though there's two corporate entities. So the Advantage owns the gas plant, we own the decarbonization. There's a fair amount of integration between those two facilities. Just a kind of a quick note, we would consider our technology and liquid solvent-based amine technology as TRL9. Like we feel like we're demonstrating it at commercial scale at this point. The technology itself, I think, has had a lot of eyes on it, a lot of development, including the work that's been done here at the University of Texas. I think there are definitely other competitors out there, but we feel like the other competitive technologies, at least at these low CO2 concentration ranges, are earlier in their commercial adoption. So I talked a little bit about this. This is really the scope of what we do, and we're looking at a lot of low-carbon projects, power projects now. We acquire natural gas, so we're actually buying the natural gas. We're going to build, own, operate the turbine. We create the power from that turbine. We're using the waste heat from the turbine to mainly regenerate the amine, not just for the turbine, but also for the capture on the recip engines. We're basically selling the power back to the gas plant. And all of that, our total timeline, for new projects is sort of in the 2 to 4 year time frame. With Glacier 2, it was closer to 2. And I think that's largely because we already had a lot of our permitting in place. And also the supply chains hadn't really blown out when we made FID decisions on phase 2. It feels like that timeline is expanding as the supply chain constraints get more real. But we think that we can do these projects in that 2 to 4 year time frame. I mentioned that we would talk a little bit about scale up. This is a little bit of a cartoon depiction of where we are in scale up. The 15 megawatts is under construction. We're working on another project, which is with a co-locator plus a hyperscaler in Western Canada. And that design is for 140 megawatts. And that's a simple step up from the T130 to the T350 turbine, which is a 35 megawatt turbine. And then we just replicate that 4 times. And then what you'll also notice is that we need a couple absorbers behind each turbine in that bigger case, and that we've modified the design from a round absorber to a square absorber, which we think is going to be more capital efficient, and we can actually modularize that a little bit. So that is design in progress. It's in FEED, and that's a project that's ongoing. And then all the way on the right-hand side, we've done some work with the GE 7H AH02 turbine, which is a pretty modern, high-efficiency gas turbine. We think that it actually makes the most sense to modularize carbon capture behind a large turbine like that. So we're not actually thinking about like one giant absorber. We're thinking about doing a modular design behind the H frame. And this shows 5 square absorbers. But what I would tell you is that I'm quite excited about a development called exhaust gas recycle, which is where you take your exhaust gas from the turbine, you recycle that to the front of the turbine. The net result is you're actually increasing the CO2 concentration in the effluent gas. And so with that, we actually think we can kind of scale down the number of absorbers that we need. And it helps quite a bit in the capital efficiency of the design. So quite excited about that. For those of you that can attend the panel tomorrow, we've got Parag Kulkarni, who's the head of engineering for carbon capture at GE Vernova. He's going to be on the panel, and he might just get a question from the moderator about exhaust gas recycle, which we're quite excited about. So that's where we would see this technology scaling up. I promised I would talk a little bit about our next projects at Entropy. We've got 4 on the go right now that I would consider in the feed stage. Publicly, we've announced a collaboration with Methanex Corporation. They have a plant, a methanol plant in Medicine Hat, Alberta. So we're working to decarbonize that plant with them. We're just finishing the pre-feed, and we're advancing that project into feed. We also are working with a Western Canadian heavy oil producer, and we have not publicly disclosed who that is, but that's another application where they use, for those of you not familiar with heavy oil production in Western Canada, use a lot of natural gas, generate a lot of steam. You're injecting that steam underground to help with the extraction of oil. It tends to be fairly carbon intense, and so there's a desire by this operator and by many operators in Western Canada to lower their carbon emissions. And so we're working with a producer to decarbonize the steam boilers. We also have another steam boiler application in California. So we're working with California Resource Corporation and one of our sister companies. So we're backed by Brookfield. Another company backed by Brookfield is Carbon TerraVault Ventures. So we're working with Carbon TerraVault to decarbonize some of the thermal oil operations in California. And then we're working with a couple others which are earlier stage. They're not in the feed stage yet, but we are working on a low CI power project with a hyperscaler and a co-locator / data center developer in the Texas region. And we're working with an ethanol producer in Illinois, which we already have stuff going on their pre-combustion CO2, but now we're working on their post-combustion CO2 as well. So a healthy pipeline. Always fun, always challenging to work in these companies that have a high growth trajectory. Again, I was asked to say a few things about the role of private equity. I think that there's a real role to be played here, and it's always been fascinating to me. I was a private equity investor for about 7 or 8 years. One of my colleagues is here today from that point in my life. It's always fascinating to me of why can private equity create these businesses? And when I think about it, it comes down to sort of 4 or 5 key issues in my mind. A lot of it is focus. So there's a lot to be said about taking a team that has the right experience and giving them a lot of focus around something that has, you can really draw a box around it. There is a little bit of a higher appetite for risk taking versus I've worked for big companies, I've worked for small companies. This is, on the left is a little bit of a depiction of Caprock Midstream, which I was one of the founders of Caprock in 2014. I was the CFO of that company. And, that's probably the smallest company I've worked for because it was 3 guys and we were sharing one office when we first started that. We sold it 5 years later for over $1 billion to Blackstone. And it was a pretty big gatherer and processor of natural gas, produced water, and of crude oil in the Permian Basin. So I think that focus and just having a highly incentivized team that understands they're willing to work that extra 10 hours a week because it's worth a lot for them. Not just financially but reputationally. I think that focus really provides a lot of just common purpose in an organization. And I think there's urgency as well. So private equity, usually 10-year funds, 8-year funds, you have to sort of get in and out in a 5 to 7 year period. And so there's always a pressure on you, right? And I think when I was in university, I used to despise pressure. I think that there's a really good aspect of pressure, which is it makes you focus on the things that matter. So, successful outcome at Caprock. I'm seeing the same urgency with Entropy. It's probably a little bit more of a challenging market, if I'm being perfectly honest. But I'm quite excited about the impact that Entropy can have as a very focused private equity-backed company. And I thought that would be a good place to sort of end the comments for me. I think CCS has a bright future. What we're showing on the left-hand side here, this is really from the CCSI, Global CCSI, is just the number of carbon capture projects that are operational, in construction, in advanced development. We think that there's interest in this technology. There's also a lot of challenges. And I talked about somebody's got to pay for it. That's probably the biggest challenge. I'm a believer that ultimately we're going to have to look at the energy quadrilemma and say, we have to address the environmental footprint that we're having. And I think that natural gas with carbon capture is a great way to do that. We're seeing increasingly willingness by the customer to have those conversations. It's certainly item number 2 or 3 on their list. Item number 1 is like, I want power. I want power now. I want it yesterday. I want reliable power, and then I want low carbon power. So the low carbon piece is definitely on the list. It's just sort of item 2 or 3. But I do think that we'll get there. And I think that collectively as an industry, we have a lot of scale-up work to do, which is the fun chemical engineering part of this. So excited about it. I appreciate the opportunity to share the Entropy story with you all. And we can move to Q&A or Carey, whatever you'd like to do.
All right, thank you very much. So let's thank Sanjay for his talk. I'll come around with the microphones. Raise your hand if you have a question. I'll start online here with the question and then come in the room. So it's a question here. How would you compare and contrast Entropy's plant technology with the NRG Petronova plant in Texas? And maybe you could say more about what you said was particularly special in the conditions in Canada that makes it appropriate there, given that you do have projects in the U.S. now. So
yeah, there's actually someone in the room that worked on that project. But I would say the biggest difference is coal versus natural gas. So the Petronova plant was coal. The chemical engineering department here at Texas can give you a long list of reasons why capturing carbon off of coal is actually more challenging. At face value, it would look like it's easier because there's a higher CO2 concentration, but there's also a lot more particulate matter, there's more NOx, there's a lot of other things that you need to deal with in the effluent gas. And so I'd say that's the technical problem is actually easier on the natural gas side, and I think that's the biggest difference. I think and that's the same with Boundary Dam, by the way. So there was a Canadian project called Boundary Dam in Saskatchewan, and they were based on a coal exhaust gas as well, and that was the biggest reason why they struggled and continue to struggle. So I think that's the biggest reason.
all right, thanks. All right, again, raise your hand if you have a question in the room.
Hi there. Sorry.
I'll come up next. You go first.
Yeah, sorry. I'm Tim Tarver from Exceed Geoenergy. One thing I did not see on your thing is geothermal, which is coming up. It's a an energy source, baseload energy source. It's in Canada. I'm from Edmonton.
All right.
So
go Oilers.
Yeah, let's go. So we'll play this devil's advocate here: Canadian versus Canadian, Calgaryan versus Edmonton Oilers.
Yeah, born in Edmonton, by the way. So
okay.
Yeah, go Oilers.
So coming off the back of your off the carbon capture, why don't you go to instead of the sequestration, which you can do that also, but why don't you run that into a geothermal plant using STO2, and that way you can get your carbon dioxide levels lower. Then you can also trade that on blockchain for energy network, which is Shell, Exxon, BP, Saudi Aramco, a couple of others. You can look at it, blockchainforenergy.net. But one of the things on the other side of that is, coming up and talking with the Canadian government, I'm sure you're aware of the geothermal policies that are coming out in Canada as well. And if you have thought about this, what have you thought about co-locating a geothermal plant for a specific customer like a data center to provide baseload energy, because you could probably double your offerings from their company with a baseload geothermal plant. Is that in any interest to you?
Yeah, we haven't thought about it, but it sounds like it could be pretty compelling. What I would say is even locating the power gen with the carbon capture and the sequestration zone and being in an area where you can get the gas and the land and the hyperscaler wants to be there, like that Venn diagram is hard enough that I would think that adding the co-location, I mean, maybe it actually, is the magic thing that unlocks a project. But we found it quite challenging even dealing with the location with just, gas plus CCS. So, short answer, we haven't thought about it, but would love to explore that with you.
Hi. Hello?
Yeah,
Hear me?
I can.
Excellent talk. Quick question. So if I understood that correctly, it sounds like you're doing waste heat recovery with thermal oil. Can you comment why you're doing that versus, waste heat recovery with steam generator?
Oh, no, it's steam. It's a HRSG.
Primarily steam? Okay.
Yeah.
Got it. Thank you.
Yeah. Yeah, and just to elaborate on it a little bit more, like we'll generate steam at various pressures, and then basically we're using that either for additional power gen, and as it steps down, then we use the lower pressure steam for amine regeneration. Yeah.
All right, over here, Sanjay.
Yeah.
Thank you. Hello. Yeah, great presentation. Thank you for coming here. I had a quick general question in terms of using amine scrubbing. I know the general drawbacks are, they're volatile, oxidative degradation. But I know one thing I was surprised to hear in a membrane conference, they were advocating membranes for carbon capture, was the significant water usage that comes with amine scrubbing. I guess, could you comment on that a little bit? Thank you.
Yeah, it's, we don't have a huge draw of water for our plants. So it's quite manageable, I think, and especially, not to harp on the data center thing too much, but like if a big piece of that application is water for cooling, and so when you look at the combined water load, the amine plant is actually quite a low fraction of that combined solution. So it hasn't really been a bottleneck for us yet, but a good question.
Hi, thank you for sharing your insight. I'm an Austin-based investor. For the benefit of the folks who aspire to be entrepreneurs here, I'm sure there are quite a few of them, could you share some of your war stories from your entrepreneurial journey? If that gets too sensational, your second alternative is to talk a little bit about how you quickly gained customer adoption in your previous venture. Either or both. Whatever you choose. Thank you.
Yeah, no, I think they're both great questions. Gosh, I don't know that I could sanitize my worst war story enough for the audience, but I think it's really about risk tolerance and having confidence in what you're pursuing and being okay with being wrong. I think, to me, it's about those three attributes, and you're not going to get everything right, and I think that can really worry people. Those people probably, should think long and hard about when they jump into something entrepreneurial, but I think it's also necessity is the motherhood of invention, and I find that when things aren't working and you really, you really try to figure out, okay, how do we resolve this problem? That's when some of the best ideas can come to life. And I'd say a good example from my prior venture was water. Like in the early days of the Permian, you produce 6 barrels of water, at least where we were, for every barrel of oil that you produce, and we viewed that as a problem, a big problem. It still is a problem that needs to be managed. But that problem turned into an opportunity, because when we started managing it, we realized that it was worth something to our customers, and it was another service that we could bolt on to our company. So, yeah, I forgot the second part of your question, but.
What contributes to your success in getting customer adoption?
Yeah, I think, to me, customer adoption is really about being open-minded about your solution and really spending a lot of time understanding what the needs of your customer are, right? And I have a phrase, which is, what disease are we solving? Because if it's something that's a mild, a customer might tell you, yeah, I'm kind of interested in that, but unless they're urgently interested in something, they're not going to work with you to resolve it. And so you have to almost rephrase your product to figure out, why is it urgent for someone to work with you? And I think that's keeping that mindset and that lens is probably the most important lens, in my opinion, to make sure that you're selling something that somebody wants. Yeah.
Hello, I'm Coleman White with Verified Carbon. We do the subsurface development for DAC, so this was extremely interesting.
Great.
So diving into I guess what sticks with me is you said it's an additional cost for CCS, and like an additional $20 per megawatt is if I'm getting that correctly. But, and then you spoke about the 45Q and kind of the compliance, and that's the $20 is taking account for the 45Q. Are you operating on the VCM, like voluntary carbon market at all? Could that be a way to offset those costs?
Yeah, so short answer, we're not operating on the voluntary carbon markets right now. We haven't had to, because we have our fixed price offtake. And I would say there's other incentives for the other projects that we've looked at to date. But absolutely, especially as the regulatory markets, look like they might diminish, I think we'd definitely be open to having those conversations.
A similar question online is if you can say anything about your revenues or profits and how much is from selling power versus the carbon offtake agreement.
Yeah, I mean, on the first project, it's about 50-50. So it's really, really rough, broad strokes. It's about 50-50. I don't know that that'll continue on other projects. Like, some of those other projects are exclusively carbon capture. Some of them are more focused on the power. And in fact, back to the question of customer adoption, a lot of it's like, hey, I can sell you power at X, and I can sell you low carbon power at X plus an increment. So, it sort of depends on how we define our business, but right now, 50-50.
Thank you. Thank you. That was very interesting. Small question is, do you sequestrate always on site, or do you transport the CO2 also to other sites?
So we're not doing any transportation.
Okay.
And our view is that pipe this way, good. Pipe that way, hard. And I'm an ex-midstream guy, so I like pipe. But I think the economics are challenging when you start to transport CO2 long distances. So we focused on projects. Again, we're looking at what I would call relatively small projects right now. Like Glacier 2 is 170,000 tons per annum. And I think with those volumes, you don't really want to be thinking about transporting it long distances. So that's where we focused our attention now. I think as we scale up, if we look at larger projects, like the transportation of CO2 might become a bigger issue. We think it's easier to focus on the low-hanging fruit, get some projects done where we can go straight down, and then figure out the other aspects of it.
All right. Anything else in the room? I got one. Okay, I'll come to you. I'll go one more online here, which is a question about the Permian Basin. Have you looked at the opportunities in the Permian, given the CO2 infrastructure there and the history there, as well as perhaps using any technology or know-how you have with the area of produced water?
Yeah, I think the Permian is the land of opportunity. Like it's a great basin. There's a lot of opportunity there. It can be a challenging place because there's so much oil and gas activity that you have to ask your question on the sequestration side, are you interfering with oil and gas activity? So I think you have to be careful about that, and it can be hard to cite projects. In fact, one or two projects that I know of have really hit pretty hard challenges because when you start interfering with people's bread and butter, like it can get difficult to get projects off the ground. But in general, I think the Permian has plenty of opportunity for low carbon power. There's plenty of gas there. There's plenty of the geology is very friendly. I think it can make a lot of sense.
Oh yeah. Did I hear you right? Your investors gave you your first offtake agreement?
Our second investors gave us our offtake agreement. Yes. Yeah, and that's a pretty specific situation to Canada. Yeah.
Awesome.
Yeah.
All right, any other questions? Okay, maybe we'll leave it there. Let's think.
We got one over
we got one more here? Okay, and then I'll announce what's going on after break. So one more question.
Thanks, Carey. Sanjay, Andrew Sexton with Trimeric, also a former student of Gary's. I guess two-part question. You talk about low-hanging fruit and the 170,000 tons a year. I guess could you speak to economies of scale, and is that kind of the minimum, I guess how little CO2 is not enough to basically get a return on investment? How much lower do you think you could go?
Yeah.
And then in terms of keeping costs down, I know you used to work at Interflex. Does Entropy have kind of an in-house, obviously with the modularization and the absorbers, you're trying to reduce field construction cost and build as much in the shop as possible. Do you have your own assets kind of vertically integrated, or your shop fabricating all your equipment to help keep costs down, or is that something you're considering in the future if you're still outsourcing that?
Yeah, so I'll take the second one first. We're not really integrated into the fabrication side of things, but we've got a lot of strong partnerships. We do have a collaboration with an engineering company, so we do a lot of our engineering through that partnership. But it's really it's starting to be a web of partners. Like it's the one exclusive engineering partner that we have is really about front end and IP and the conceptual design, and then we're really starting to branch out in terms of construction, detailed engineering, getting different partners for different projects that we're looking at around North America. So it's a bit of a web. I forget the first part of your question. Sorry.
Minimum volume.
Oh yeah.
Economies of scale become too much to overcome kind of.
Yeah.
You just repeat it for the microphone.
Yeah, sure. So the question is, we got a 160,000 ton per annum project. How little is too little before the economics of scale really start killing us? I think it depends on the scope of the project. If it's pre-combustion, I think you can go quite low. Our view on post-combustion is below 100,000 is going to be really, really hard. So that's generally kind of where we are. And fortunately, we're looking to scale up and not go down.
Thank you.
Yeah.
All right. So before we thank Sanjay, I'd just like to point out everybody has these cards on the table. This is to respond to what you found, answer surveys after every talk potentially as to what you found useful at Energy Week. So please scan that and enter that survey as you will. We'll come back at 1:45 for an entrepreneurship chat. So we have a 15-ish minute break. And with that said, let's thank again our speaker, Sanjay Bishnoi.
Thank you.
Entropy. Thank you.